Good morning and welcome to Kramer's Corner with the daily technical updates. It is Friday the 22nd of March and from now on I will introduce a new thing here on doing my my little videos. I will have stock of the day as much as possible, and the one we'll start with today is Apple. Massive sell-off, 4% lower in yesterday's session. Resuming downtrend, it seems, and what we should also observe is that the support over here's the weekly chart and here's the daily chart. A strong support around 165, 166. If we break that, if we close below that level, then there's much further downside for Apple stock. It is really depressed at the moment, so that one is really weighing heavily on some of the indices. Not so much on S&P, well, of course it does, but not so much on that one than on the Nasdaq index, but we'll get to that in a second. S&P closed higher, and everything, so there's still room up to around 5,300 possibly. The Dow Jones, we also looked at that yesterday, also closed much higher, closed at the 161.8, just below 40,000. We could reach our 40,000, but let's see. It will absolutely create some headlines, no question about it. And it seems like we will reach that. There seems like it'll be a massive shift in sector and industry rotation. In the US market, it is not the tech industry that is running the show anymore. It is some of the old-fashioned. It is mining. It is banks and these old companies. The Nasdaq 100 was interesting. Yes, we closed higher, but we also opened much higher. We opened at a new high, but we closed lower. And what is interesting, and that should be of note, we did close below the peak of the bears engulfing here, so it wasn't cancelled. 18,417. Keep an eye on that level. That is the level to close. Until then, the top and reversal pattern is in place for Nasdaq 100. European markets spiked higher, still moving much higher. We can adjust this a little bit, and that it is okay to do that because they are not carved in stone, these rising trend lines there. They can sometimes be a little bit, but of course you shouldn't adjust them too much. But we are still in a very straight rising trend line, and we need a correction. We are, we are really ripe for it. But as long as the trend is your friend, and what I would say is that draw a trend line here, or support line, 4,975, that is the level to look out for. Break below that one, then we can see a larger correction down to around 4,900. DAX, also strong move yesterday, really strong move, and very close to cancelling its RSI divergence, but we are in a strong uptrend, and it is it doesn't look to be changed anytime soon. What was interesting yesterday, that the CAC 40 closed a little bit higher, yes, but it actually the sellers took control from the beginning. I mean, I think we are very close to a top here. We have these dojis here, these spikes here, shooting star-like and everything. Look out for what's happening if it starts breaking below these supports here. It's not the strong supports, but that could be a sign of a correction looming. But for now, we are still in an uptrend, so stick with that, but be cautious out there. Swiss market pushing higher, and I think it will push a little bit higher in coming times, but we need to close above 11,800 for further upside potential. A lot of volatility yesterday also and this morning in FX market, and especially euro dollar. What it did, and I actually deleted it, but let me just add it again. What it did, it actually shot up to the 61.8 retracement and almost up to the 786 at just below 109.50. And then it collapsed, total collapse. Didn't close above the cloud, and let's zoom in a little bit, see what is actually going on. So selling off, now testing this 61.8, or very close to be testing this 61.8 retracement at 108 and a change. key support at 108. If we do close below or break below, I think we'll see a further sell-off down to 107.56. If we do close below that level, we could see further selling down. Then there's the down trend potential to 107, possibly lower. But this is a clear case of what's going on. We have 55 moving average coming down. We have 200 flat. We have 100 coming up, ascending here. So there's a conflict, and we will see that in some of the other pairs. We will see that in dollar index. There are conflicts between them, short term and medium, and then that's when you see this frustrating moves here, up and down, a lot of volatility without really getting anywhere, and that can be frustrating for it. But look out for 108, what will happen around that level. Swiss franc spiked higher yesterday after the National Bank cut interest rate. It actually shot all the way up to 61.8 retracement at 97.75, really strong resistance. We also have the 200 weekly moving average coming down here, putting a lid on it. I think we will have a little bit of a correction short term, but it seems like the cat is out of the box, and there is further upside potential. But expect some correction from current level here. We have the daily chart. It went straight through the 97 resistance and to the 97.75 and was shot a little bit. Expect a little bit of correction, but then I think we will have another go at it. If we look at the other Swiss pair, and it was you can check my written report yesterday. Dollar Swiss, after really taking off from the 89. 90.5 around that level, where we have the 786 retracement of the downtrend here from late last year until end December. But we could shoot up to 91, but it is struggling a little bit. But there is uptrend potential. It seems like a Swiss franc is going to be weakened further. And here on the weekly chart, you can see 90.5. That's the level to look out for. Other movers and shakers, so to speak, is cable that went up to 61.8 and then totally collapsed and took out the support here at 126.66, which was tested a couple of times the past few days, and now we are actually trading around the 126 key support and 200 moving average. Close below today. Well, then we are looking at 125 around that. Other than that. Otherwise, we will see a bounce. We can see that the moving average is starting to turn around. So it seems like cable is on the way lower. The dollar yen can't really move past this 151.94. That is the peak from last year. I think we will see a little bit of a setback, but it will have another go. And if it does break above, well, then we are looking at I believe 153.50 fairly short term. Euro yen totally collapsed after reaching the 138.2 at 165. We talked about this yesterday. Say expected setback, a little bit larger than expected, but it is testing the previous peak here at 163.70. It will find a little bit of support, but it's not unlikely we could do the dip a little bit lower before we possibly see next move higher, but it is a little bit depressed. What we can also see here is that there is a RSI divergence, meaning that the RSI is not supporting this uptrend here, and it is an inexhaustive move. So maybe we should see further selling pressure in euro yen. If we break higher on euro yen, or if it bounces, look out for what's happening. If RSI is breaking above the falling trend line, well, then there is a further upside potential. Aussie yen forming this doji evening star-like pattern here, really unusual in the FX market, spiking above the 132 projection and above 100. And we talked about this yesterday, that we could see a correction, and now we are back to 98.60. We could drop all the way down to 98.25. Let's see what I will do. I will add a little bit of a Fibonacci here, and that's my guidelines. That's my toolbox. Then I'll look at, see, we're already below 38.2. I think we could move down to around here. That would be a really strong support around 98.25. Moving on to directly to the dollar index today, I would say dollar index also jumped back higher here, and we have this conflict we talked about between the moving averages, so that's why you see a lot of volatility. 104.25, that is the key resistance to look out for if it does close above, and if RSI will be closing above 60, and it will if we close above here, then there's further upside potential. Otherwise, I believe we will be rejected, and then we will be caught in this range volatility area once again. Gold traders also had a very volatile day yesterday. As we can see here, it actually spiked higher to almost hitting the 161.8 projection of this correction down here, and 38.2 extension of this upwards move here, and that is interesting that they are actually colliding, or they are actually almost at the same level. We were very close to before sellers just took back control and hammered gold lower. What we should look out for now is 21.46 key support. If we start to move below that, then we could see a larger correction, and then maybe this entire uptrend picture will be demolished, at least short term. But I do expect it to hold, and we will see a pickup. What I will do, just a very and normally I don't do that when we do these sessions. I'll look at the 1 hour chart. You will see how it shot up, and then suddenly it's just collapsed again. And you see this down here will be the key support area at 21.46. I think it will hold. We have moving averages coming up here, but for now it is definitely under pressure. So keep your stops tight and close. The silver contracts also collapsed. Didn't reach 26, but there's no divergence on the R side, which is still in a positive sentiment. We are bouncing from the 38.2 retracement at 24.40. I don't think we will move much lower than that, but it shouldn't be ruled out. I mean, with the volatility and everything at the moment, it seems like there's a lot of nervousness in the market. If we have another go below, well, then we are probably looking at 24, possibly a little bit lower. But the uptrend is still intact. Just very briefly on the oil market. Still a little bit lower here on the WTI, but we are in an uptrend with higher highs and higher lows. $79.77. Sorry. Key support. It can test it, but we are in an uptrend. Should move higher later. Finally, U.S. Treasury yields. Also, we have some conflicts here, similar to the dollar index and similar to euro dollar, where we have the 100 moving average coming down. We have 555 up and 200 up. We could see the US 10-year Treasury yields dip to 4.15, which is 61.8 retracement of this uptrend here. But then I think that will be it, and then we will bounce back. So that is the volatility you should expect from the US 10-year, and really strong resistance at 4.35. All right, that's all for today. A long one. Once again, apologize about that, but there's lots of stuff to talk about. Have a nice day. Have a nice weekend when you get to that, and happy trading.